It's Tuesday, the 2nd of March 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. In today's headlines, house prices jump at their fastest pace in 17 years as owner-occupiers and investors borrow up big. Plus, local and international share markets rebound as economic confidence returns. The Royal Commission into Aged Care final report says the industry is besieged by neglect. And the number of job ads surged to levels not seen in more than 2 years. Our lead story today, house prices have jumped at their fastest pace in 17 years, thanks to low interest rates and growing confidence that the economy will bounce back throughout 2021. The price of a capital city average dwelling is now at its highest level ever, according to CoreLogic figures. Prices in Hobart, Canberra, Brisbane and Adelaide are all at record highs. Sydney house prices jumped 2.5% last month and are up nearly 3% over the past year. Melbourne prices were up 2.1% in February, but are down 1.3% on a year ago. Regional house prices are up more than 9% over the year and have benefited from people wanting to shift away from the cities. The surge in prices is consistent with increases in new housing debt. Bureau of Statistics figures showed that Australians committed to almost $29 billion in housing loans during January, up 44% on a year earlier. The figures show that investors are also hopping back into the market, having been relatively sedate throughout most of last year. What's driving the boom? Low interest rates, pent-up demand, government incentives, the COVID-19 pandemic triggering a push to move from the city, fear of missing out, Australians' love affair with housing, it just goes on. The housing data adds another dynamic to the Reserve Bank board meeting later today. In overseas news, it was a very strong night on Wall Street, and the rebound from the sell-off late last week reflects growing confidence that the economy has turned the corner and will continue to be supported by the Federal Reserve. European markets were also stronger across the region, and the Stoxx Europe 600 closed 1.8% higher. Bitcoin fell to its lowest level in 3 weeks yesterday, trading at a little above $43,000 a unit. That was down 25% from its peak just 7 days ago, but overnight it rallied again. Former US President Donald Trump said he might run again in 2024. In his first comment since leaving the White House in January, he said he wouldn't set up his own party, but could seek the Republican nomination. And the European Union is set to propose a personal electronic coronavirus vaccination certificate once immunisations in the region are rolled out. Locally, the share market rebounded strongly yesterday following the big drop last Friday. The S&P/ASX 200 finished the day up 1.7% to 6,790 points. Commonwealth Bank regained the mantle as the biggest company in the country after its share price jumped at more than 3%. It's always interesting watching share price movements after earnings season is over. After the initial rush of trading following announcements, broker notes and chief executive meetings take place, and what happens this week gives a better sense of what professional investors think of stocks. Some of the stronger companies shone through yesterday, with Goodman Group, Afterpay, Healthcare Group, CSL and conglomerate Wesfarmers all up by at least 3%. The federal government has committed an initial $500 million to improving aged care in Australia after the release of the final report of the Royal Commission into the sector. The 2,000-page report includes 148 recommendations. It says the aged care system is besieged by neglect. Too many old people don't receive the care they need. Staff levels are too low, and the system fails those with special needs. Prime Minister Scott Morrison said the system must shift from funding-based to needs-based, and more spending on the sector will be part of the budget process. He didn't rule out a new tax to fund the sector. National Australia Bank Chairman Phil Cronican said Australia had steered its way through the coronavirus pandemic, and now it was time for management of big corporates to make bold decisions and invest. He said companies needed to break from the pack and boards should be more demanding of management. The number of job ads last month surged by 7% to 176,000, the most since October 2018. The labour market is critical to the economic rebound, and the Reserve Bank has made it clear that until the employment market is back to good health, interest rates will stay low. The ANZ job series was up 13% on a year earlier. The CFMEU's mining and energy division will split from the union, saying it's been overtaken by macho posturing and chest beating and never been less respected. Delegates representing workers from miners, power station and coal ports have voted to apply to the Fair Work Commission to withdraw from the militant union. China's investment in Australia hit a record low of $1 billion last year, down 61%, according to the ANU's Chinese Investment in Australia database. There are only 20 projects, down from 111 in 2016, when total investments were worth $16.5 billion. An upmarket retailer, David Jones, will scale back its food stores and halls after the chain lost $12 million during the December half. DJ's is owned by South African retailer Woolworths Holdings. My grandmother, if she were alive, would be devastated. That's the Fear and Greed business headlines for today. Make sure you've hit subscribe so you don't miss out. There's also more in today's full Fear and Greed podcast, including an interview with Jonathan Armitage, Chief Investment Officer at MLC. I'm Sean Aylmer. Enjoy your day.